Hey guys, and welcome back to my channel. In this week's episode, we're going to talk about how the Bank of Canada just held interest rates for the second consecutive time, what that means for the Vancouver real estate market. We're going to continue to talk about the missing middle rezoning of Vancouver and how that's being expedited right now. And then I'm going to give you some anecdotal stories about what's happening on the street in Vancouver real estate. Very quick, if this is your first time to the channel, my name is Hassan. I'm a real estate agent in the Vancouver area, and I make educational real estate content to help you in your real estate journey. I also make content designed to help you make your move in and around Vancouver. So if that sounds interesting to you and you want to talk about your own situation with me one-on-one, you can book me in the Calendly link in the description box, or you can shoot me a text, send me a message, whatever works. But regardless, subscribe to this channel so you don't miss a future video. So the Bank of Canada just announced this week that they're going to hold interest rates at 4.5%. This is the second consecutive hold announcement after about 8 raises since last year around this time. So in terms of what's happening with the real estate market, the last time that this occurred when the Bank of Canada held the rates, there was already an influx of activity from buyers who wanted to re-enter the market. They had been waiting for some sign of stability from the market. From a personal experience perspective, I actually didn't expect so many people to come back to the market after the last announcement from the Bank of Canada that they were going to hold rates, because there was still uncertainty in terms of what might happen with rates moving forward. But we're in a situation now where they've done it 2 times in a row. So stability in the market has been regained. I would say consumer confidence is back much higher levels than they were last year. And we're seeing that in relation to sales activity in Vancouver real estate. Now, some of this has to do obviously with low levels of supply in the market, but without a doubt, buyers are back to the table. They're ready to go. They're writing offers. We're back in scenarios where we're seeing multiple offers on, I would say, 90% of properties. If they're not priced out of reach or they're not priced unfairly, they're likely to see multiple offers. So with this latest announcement, yes, interest rates are still high. And I say that with a grain of salt, because if you look historically, yes, we're a little bit higher than history might show, but we have to keep in mind that interest rates were ridiculously low during COVID. They had gotten down to 0% essentially. So when we are coming off of something like that, when we see 4.5%, we're thinking that's high, where yes, it maybe is a little bit higher, but kind of that 3 to 4% range is more of a standard rate. From the Bank of Canada perspective, they are expecting that inflation, which is what they're trying to get under control, should hit 3% by the end of the year and then hit the 2% target by next year. So what the Bank of Canada has done by raising rates as rapidly as it did over the last 12 months has worked. And it sounds like we're now in a scenario where we're going to see some stability for some time, and that stability is definitely going to increase buyer sentiment in the market. Now, in my previous video, I talked about David Eby's housing plan and how a major component of that was creating missing middle houses, the product between the townhomes and the row homes, duplexes, etc., for more families to move into. Vancouver is expediting this process. They just came out last week, Vancouver City Council, with a recommendation to essentially rezone 220 lots, single-family lots in the Vancouver area between Oak and Ontario and King Edward and 55th, to rezone those to townhomes and row homes. They're calling it a pre-zoning. Now, what happens if they do a pre-zone or a mass rezoning is they take away the public hearing element. They basically shave off at least a year in the process for developers who may want to purchase these lots and build this missing middle of housing. It's funny, David Eby came out last year and he put a lot of pressure on the municipalities to expedite housing starts. When people are, I guess, threatened with their jobs in some sort of way, action finally starts to happen. And when I mention these public hearings, let's make no bones about it. When we talk about the housing crisis in Vancouver, the crux of it, what started everything, in fact, what created the entire housing crisis, is giving too much voice to select individuals and special interest groups. We were giving too much voice to these public hearings and people that didn't want to see their neighborhoods change. From a city council perspective, they were pandering for votes, and those loud voices are the voters. So in order to keep themselves in office. They were pandering to a smaller minority who didn't want to see their views change, didn't want to see multifamily and enter their single family neighborhood. And here we are. So where I stand today on the entire issue is I commend the government the provincial government for actually pushing these projects forward. And this sort of pressure is what's creating Vancouver really expediting their process surrounding that townhome, that missing middle, that multiplex. They're saying on the multiplex decision, whether we'll see fourplexes or sixplexes on single family lots, that'll come in the fall. I wouldn't be surprised if we hear that happen much sooner than that, sometime in the spring or the summer. So we've talked about how the Bank of Canada interest rate has been held for the second consecutive time. And I want to quickly talk about what this means for homeowners in general. If you're a variable rate holder, that means your payment is not going to change. A lot of variable rate holders are on adjustable payments, meaning that their payment would have already changed each time the rates went up last year. Or if they are on a fixed payment, a lot of people hit trigger rate, including myself on one of my properties, meaning that my entire payment at the time was only going towards interest. And at this time, there were a lot of people saying that homeowners, investors that held investment properties, they were going to struggle to make their payments. We were going to see lots of foreclosures. We were going to see pain in the market. And that just hasn't transpired. And the message I want to give to you today is here in Canada, good or bad, our economy is so reliant on real estate, and our governing bodies, they are so reliant on real estate, but they're also so reliant on the homeowner doing well and not being under stress. From the federal government level in their budget last month, they basically put it out there to the big banks saying, look, if you come across some of your homeowners that are struggling to make payments, you can extend out the amortizations. Many of us are on 25-year or 30-year amortizations, but the federal bank said, look, if you need to extend it out for a reasonable amount of time, which they didn't quantify, just do it. We have to keep in mind home ownership rate here in Canada is between 65 and 70%. Like I mentioned earlier, homeowners are the voters, right? So the federal government needs to appease the homeowners. The provincial government needs to appease homeowners, and provincial government relies on property values going up, on real estate going up, so they can collect property transfer tax. The municipalities, I don't need to tell you, they have their taxes in place. So they require not only real estate to go up in value, but they require housing starts for their budget. So our entire country is meant to look out for the homeowner. Now, if you go out there and you do something reckless in any sort of market, whether it's like a market we've seen over the last year or a very hot market, you're putting yourself at risk. So if you go out there and you put your name down, write contracts for 6 pre-sale condos, yes, you might lose 4 of them when all is said and done. But if you are thoughtful, if you are sensible, if you are not spending outside of your means, Canada as a country, does look out for you as a homeowner. From the lender perspective, the banks aren't in the business of foreclosing properties. They're in the business of collecting interest. They want to give you mortgages, so you pay them interest. They will help you along the way as well. Again, this is not financial advice. Don't go out there and take a bunch of risks. But keep in mind, in Canada, you're protected by things like the stress test. There's a smaller group of people, I would say, out there, very vocal, that are waiting for a housing crash or calling this a housing bubble for years and even decades, and that just hasn't transpired. So my, advice to you is to listen to all sides of it, and make your own decisions on where you think the market is headed, whether it's the right time for you to make a move. Only you can make that decision when it comes to real estate, whether the time is now for you to buy or to sell. Now, very quickly before I end the video, in terms of what's happening in the market out there, like I mentioned off the top, multiple offers are happening in many places. If you are buying property out there, there are some opportunities. The opportunities that I'm seeing are the tenanted properties. So when we talk about interest rates maintaining at the same consistent level, while this is positive news, for a lot of investors, it's not great news because they may have rental properties where tenants are paying below market rents. They're not actually covering all their bills. Now, are these investors, are they going to put their properties on the market rather than continue to hold and feed the properties? I'm seeing a lot more tenant-held properties or tenant-occupied properties placed onto the market. So there could be opportunities there. it really depends on what that tenant is paying in rent. Unfortunately, it's a scenario where when these properties hit the market, oftentimes the next buyer is an end user, and that tenant gets displaced to have to go find another property now and at a market rent. Now, my unpopular opinion is that I feel like most tenants would actually welcome an increase in their monthly rental rate if they considered that alternative, that some of these investor types are going to put the properties on the market. And when investors look at that property, my investors that we're working with when we're purchasing rentals right now, we're specifically targeting vacant properties or properties where the tenant is paying a market rent. So we'll probably shy away unless the dollar amount is attractive on that property that has a tenant that's paying below market. Then yeah, some of my clients would jump on it, or some people out there would jump on it. But oftentimes it's the end user that's getting into that property and unfortunately displacing a tenant. So there you have it, guys. That's what's happening in the market and the Bank of Canada holding rates, what that's going to mean for Vancouver real estate as we push forward. If you learned something in this video, if you enjoyed it, it'd be great if you could hit the like button and consider subscribing. What that does is it takes this video and it sends it out to more people so they can learn from it as well. If you're in the Vancouver area and you want to talk to me one-on-one about your real estate situation, send me a Calendly booking below, or you can just shoot me a text, give me a call, send me an email, whatever works for you. But thank you so much for watching again this week, and have a wonderful day.